The key to having success in the stock market is also one of the hardest parts about the stock market, because it's picking the correct stocks and ETFs to hold on to long term. And when it comes to building a successful investment portfolio, the choices can not only be overwhelming, but many choices require massive amounts of money invested in order to earn a sizable amount of dividend income. But in this video, we are going to go over what one of the best, highest quality dividend growth ETFs are across the entire stock market, in my opinion. And then later on, I'm going to explain to you how just $10, yes, $10 invested into this beast of an ETF on a daily basis over a 10-year time frame could result in not only a massive net worth down the road, but also huge dividend income as well. Now stick around, drop a like down below, and let's get right into it. Now the ETF that we're going to be going over in this video and the example that we're going to be using of investing just $10 per day over a 10-year time frame, which is going to turn a relatively small amount of money into a massive nest egg down the road, along with on top of that huge dividend income, is going to be the Schwab US Dividend Equity ETF, or SCHD. Now, of course, I'm not saying that this ETF is the only ETF that you can use for the same type of investment strategy. You could, of course, invest into any stock or any ETF and have great success down the road. But the reason we're going to be using SCHD for this video's example, and the reason why the Schwab US Dividend Equity ETF is my largest ETF holding as of right now, is because the ETF has a high quality basket of holdings, it pays a nice, decent starting dividend yield, and most importantly, in my opinion, offers massive dividend growth. But don't worry, we're going to be looking through all that in a second here. But for those that might not be directly aware, the Schwab US Dividend Equity ETF's objective is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. Now, because the SCHD ETF's objective is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. Looking right here at the Dow Jones US Dividend 100 Index methodology, this right here basically explains exactly how stocks are either added or taken out of the Dow Jones US Dividend 100 Index, or the index that SCHD tracks. Now, this is a pretty sophisticated process, and because of the screening process, it makes it really tough for stocks to even be qualified to enter the index to begin with. To enter this index, stocks must pass the following screens. Things like minimum of 10 consecutive years of dividend payments, minimum FMC of US 500 million, minimum 3-month ADVT of US 2 million. Now, there's all sorts of other different screenings that stocks need to have or need to pass in order to be qualified to be entered into the index. And as of filming this video, SCHD is currently trading around $70 per share, and it's been sort of hovering around that range for quite some time now. But if we zoom out over the last 12 or so years, SCHD is up over 168%. Around 12 years ago, SCHD was trading in the $25 range, and now trading at around $70 per share. Now, just a side note here, in my humble opinion, where SCHD is currently trading as of right now, could be offering a massive buying opportunity for dividend growth investors like myself that are looking to lock in a massive starting dividend yield, relatively speaking, and ride this investment vehicle all the way to the top to new all-time highs, hopefully sometime within the next few years. But now to get into the important part, the current dividend yield for SCHD and the dividend growth rate. Now, these two metrics are going to be very important, especially for the example that we're going to be using for this video of just investing $10 per day on a daily basis over a 10-year time frame. Now, dividend yield and dividend growth rate are important because not only are long-term dividend growth investors looking to make a bunch of gains on paper and see their net worth go up, which of course that's also part of the goal. But for dividend growth investors out there, just like myself, we also want to build a bulletproof portfolio that's going to be paying massive amounts of cash flow on a yearly basis. And with the SCHD ETF currently yielding around 3.76%, that's over twice the dividend yield of something like VU or S&P 500's SPY. Now, with the higher starting dividend yield, you are going to be getting much more cash flow from day one. But as any trained dividend growth investor knows, you don't buy into a stock or ETF just because it offers a nice, decent starting dividend yield. There has to be more other metrics that it also has to offer. And the other metric that SCHD offers loud and clear is dividend growth rate. Now, dividend growth rate is basically how much a stock or ETF pays you in dividends compared to the last year. And looking at some of the metrics when it comes to SCHD, the 10-year dividend growth rate is 11.11%, the 5-year 13.69%, and the 3-year 11.44%. Now, what this basically means for some of the newer dividend growth investors out there is that SCHD, for example, over the last, say, 12 or so years, has consistently paid out more and more in dividends year over year, with very, very few exceptions. And what this has created for SCHD shareholders, like myself and probably like many of you, it's created an investment vehicle that's not only went up in price as far as ETF price over the last, say, 10, 12 years, but also this investment vehicle has not only paid you every single quarter in the form of a dividend payment, but also has been paying more and more and more as time goes on. Now, I could, of course, explain to you why and how dividend growth is very important, but I think it's sort of common sense here. We want to get paid more and more over time, just like at a job that you might have. You want to get a raise every year or so. And when it comes to your investing, it should be no different. But now we get to the good part. How much can an investor that just purchases $10 per day into the SCHD ETF or an ETF that has similar metrics earn over a long time frame? Now, for this specific example, and keep in mind these are all going to be estimated numbers, we have a starting principal of $3,650. Now, there's 365 days in a year, so we're just saying a $10 on average on a daily basis invested into SCHD, which is also going to give us an annual contribution of an extra $3,650. Now, SCHD's dividend yield is somewhere around 4%. The expected annual amount increase somewhere around 8%. Remember, all these numbers are going to be estimated. The distribution frequency is quarterly. DRIP is going to be turned on, which means all the dividends that are paid along the way from now until retirement are going to be reinvested and buy you more shares of SCHD, which are also going to pay you more on a quarterly basis and are also going to pay you more and more over time because of that dividend growth rate. And we're going to be looking at this over a 30-year time frame. Now, keep in mind, if you're a little bit younger, you could always go 40 years. If you're older, you could always go 10, 20, but let's see what we get. So year number one, with just $10 per day invested into the SCHD ETF, we're looking at a $3,650 principal with around $148 per year in dividends. By year number two, after those dividends are reinvested, and on top of that, you are also going to get that annual contribution amount, $3,650. We're at $7,500 and $321 per year in dividends. By year number five, this investor would have around $21,000 in principal and now over $1,000 per year in dividends. Remember, this is just from $10 per day bought into the SCHD ETF. By year number 10, a little bit later down the road, we're looking at $51,500 and $3,200 per year in dividends. Year number 15, $100,000 is now surpassed in principal and around $8,000 per year in dividends. Even further down, year number 20, $188,000 in principal and almost $20,000 per year in dividends. Now, of course, a little bit later down the road, we're talking $365,000 with $47,000 per year in dividends, and this is 25 years in. Now, by 30 years in, we're talking $769,000 and $129,000 per year in dividends. But of course, to go back to the original question, how much can an investor expect to generate on a consistent basis with just $10 per day invested into something like SCHD over a 10-year time frame? An investor could expect to have over $50,000 in principal and over $3,200 per year in dividends. Now, of course, every dividend growth investor out there probably has their own favorite stock or ETF that they buy on a consistent basis. And for me personally, like I talked about a little bit earlier, it is the SCHD ETF. Now, my specific reasons for choosing my daily purchases with the SCHD ETF is that it honestly just matches exactly what I'm looking for. It offers growth, high dividends, and my favorite metric of all, high dividend growth. But now I want to hear from you guys down below when it comes to a daily stock or ETF that you buy on a consistent basis. Drop the tickers in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.